So what you need to know about the Australian dollar. Well, the Australian dollar is a pretty actively traded currency, but is not as nearly as liquid as the euro and the British pound. And because of that, there is some unique implications that this lack of liquidity has for the Australian dollar. First and foremost, it basically means that we tend to have more jumpy and erratic price action in the Aussie. It also means that we can have periods of time where the spread in the Australian dollar can get a little bit wider. So it really depends upon the time of day that we're trading, as well as the type of environment that we're trading in. The Australian dollar is the sixth most actively traded currency in the world, so it trails behind the euro dollar, the pound dollar, dollar yen, even dollar Swiss, and other major currencies. Australia is the 13th largest economy in the world, and it's home to the 8th largest stock market. So there is quite a bit of interest in the Australian markets, in the Australian economy. But what we have to bear in mind is that it is the 8th largest stock market, which means that it's not extremely large, it's not extremely small. So there's only so much capacity that the Australian markets can take before you actually see some larger, illiquid movements in both equities and currencies. Now, even though it's the world's 13th largest economy and is home to the 8th largest stock market, last year, Australia was the fastest growing advanced economy. Now, because it was the fastest growing advanced economy, the Australian dollar held up pretty well in 2011, particularly in the beginning of the year. It basically, rose above parity, rose to a high of 1.1080 in July. Did fall off a bit after that, but it still ended the year above parity. The Australian dollar gets a tremendous amount of interest because it has the highest interest rate among the G20 currencies that we trade. So in an environment where, we had some periods of time where investors felt comfortable enough to take on some risk, the Australian dollar did find some demand in the beginning of 2012, because even though Australia had some indications of slower growth, the Australian dollar still offered a high enough interest rate that we still saw investors around the world basically move some of their money into Aussie dollars. So that's an important fact to remember, which is that despite what may come in terms of what the Reserve Bank may do over the next month, over the next few months, Australia still offers a relatively high interest rate, and so that could temper any major decline in the Aussie dollar. The Australian dollar currency pair, as number 6 said, tends to have a wider spread than the euro dollar and pound dollar. So because it has a wider spread, it can be looked at as a slightly riskier currency to trade. And because it's a riskier currency to trade, on days when we have quote-unquote a risk-on move, when stocks are rising strongly and the investors are optimistic, that tends to be very positive for the Australian dollar. But unfortunately, when markets are somewhat nervous, we tend to have a significant sell-off in the Australian dollar. So that can explain why we've seen such a sharp decline in the Aussie dollar today. Now, one of the interesting things about trading the Australian dollar is that it's most active during the time zone of Asia going into Europe. So Australian data tends to be released in the evening in the U.S., which is anywhere between 7:30 to 10:30 p.m. New York time. So that's when we tend to see a little bit of volatility in the Australian dollar, and that volatility tends to carry through into into the early European hours, and sometimes even into the New York Open. But usually that's when we see the most interesting and most active trading in the Australian dollar. So for those of you that are keen on trading the Aussie dollar, then the Asia-European overlap may be an attractive time to trade. And what you'll find about the Australian dollar is that there's a relatively unique behavior in the currency, in that it will trend intraday for a couple of hours, and then it will range. So this is something that's pretty important to pay attention to, because you can have a period of time where you have the currency pair, rally, 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 and then do nothing for a couple of hours. Or the reverse, where it can sell off, sell off, sell off, and then do nothing for a couple hours. It's a very common type of behavior that we see in Australian dollar. Even if you look at the price action in the Aussie dollar today, much of the sell-off that we saw in the Aussie dollar was pretty much during the Asian and then into Europe. And from, I would say, about 5 a.m. till now, we haven't seen too much volatility in the Aussie dollar. And once again, it's very common with regards to how the Aussie dollar trades. And number 10 is the last thing, but one of the most important things to remember, which is that Australia has one of the highest interest rates among the G20. So some of the key stats on the Australian economy. Well, Australian GDP is about $1.57 trillion. So that's, a pretty good-sized economy for Australia, but you can compare that to U.S. GDP, which is about $14.5 trillion. So the Australian economy is only about a tenth of the size of the U.S. economy. Population-wise, there's about 22 million people that live in Australia, which is less people than the population in Texas. So Texas has a larger population than Australia. Yet the unemployment rate in Australia is quite low, 5.2%, and the GDP per capita is pretty high. Australia actually has 8 times more adults earning over $100,000 than the global average. So what this tells you is that Australia is a relatively rich economy. And even though they have a very small population, they generate, a pretty good amount of GDP growth per population. At the end of the day, however, because they are a small country and a small economy, they can be very sensitive to global development.